FSN Radio. It's all about what's next. Go to FinancialSurvivalNetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. It's Kerry Lutz, and with us is Peter Grandich. Been taking a break, and he's none too happy about the precious metals markets, but nobody is out there. Peter, welcome back.
Thank you, Kerry, as always.
Hey, so we've seen gold break that $1,300 mark, and silver break the $20 mark, and hey, so what's going on here?
Well, I pointed to you before we began. It's technical, not physical. What we have mostly is because the market was really gone extremely quiet, open interest has dropped dramatically on the CRIMEX, better known as the COMEX. We have seen technical trading in the market cause stop losses to be implemented. We're not seeing any real change in the physical market. And ironically now, we just start now the most favorable seasonal period for gold. So use the excuse, as the media does. They always believe you can't simply say there's more sellers than buyers. You have to come out for reasons why there are more sellers than buyers. And in this case, they'll use a little blip up in the U.S. dollar. And the continuing strength in the stock market is probably a negative. And then probably the other excuse would be is the so-called geopolitical concerns aren't as bad. Now, I laugh at that one, and I have to tell you why I laugh. Because let's just say a month or two ago when gold shot up towards $1,360, and you picked up a story, it would say that it ran up because the concerns about Russia and the Middle East. Well, I don't think anything's gotten any better on Russia or the Middle East since we were at 1340 or 1350. Yet they say now it must have gotten better because that's why gold's gone down. Gold's gone down because of technical selling, and I think if we beat around the bush and try to make any other excuses, that's all it would be. There are technical traders moving the market. They're taking out stop losses. Selling begets selling, just like many times buying begets buying, and that's where we're at now. And we may, and we'll probably know in the next few trading days, we may need a washout or at least a test of the triple bottom in the 1185, 1180 area in order to finally complete this tremendous building of a foundation that gold has been doing since correcting from its 2011 highs, and then see a spike up in volume. And that's, I guess, an optimistic view, but I think it's more of a likely scenario than breaking through and just continue on down.
Yeah, you think the manipulation's alive and well, huh?
I don't would say this is manipulation. I really think this has been left. We've seen such a drop in the open interest, and let's face facts that chart trading is still done off of what happens on the COMEX. It doesn't trace the physical market. And the few big commodity funds that are out there, they manage to, they know when to sell to create more of a worrisome view than really is deserving of what's happening in the physical market. Every report that I could see from people who've been good sources for dozens of years on physical market doesn't report any heightened gold physical selling. So obviously it's technical trading. And technical trading in this type of environment where open interest is shrinking can become more profound than it really is. And that's what I believe has been moving the market in the last few weeks.
Yeah. And I mean, how many people are really out there selling their physical metal for real?
Yeah. And again, I so many years of saying this, and it just unfortunately now people are so short-minded and they forget. We always have to remember that gold is a hated investment among 99.5% of everybody that works in the financial service industry. vast, vast, vast majority of people, the 300 and something thousand licensed people just in the United States that are involved in financial service sales, whether they're working in a bank, an insurance company, a brokerage firm, they're in the business of selling financial products, whatever it is these days, wrap accounts, annuities, mutual funds, whatever the case is. And gold goes against that. So they're not telling those people to buy all those things I mentioned plus gold. And so you're never going to have the financial service industry, the people that work in it, and much of the media that makes its living following it be supportive of gold. It's just not going to happen. And when the opportunities come to pan gold, excuse the pun, but to pan it, those people make every opportunity. That's why if you just did a count, you will see that when gold goes down, there's 10 articles about it going down. Then when the times it goes up, for every one article that it goes up. And that's just the way of the world. So you're also not only seeing gold go down, but you're reading and hearing from people, well, this is the reason, and all the negative reasons come. And that's what's setting us up for what I like to call the contrarian delight. I really think even among what I call perma bulls, I've never been a perma bull. I don't sell. I have nothing to do with the resource market anymore. And so there's nothing incentive-wise to say it because my livelihood depends on it. But even among the perma bulls, the people who we've known for years have always been, they've never seen gold in any other way. Even they are pulling in their reins. Even they are writing about possibly gold going lower, substantially lower. And that would make a contrarian, just perk up their ears as I have and say, oh, this may be, just maybe, setting up for the washout that we need. In fact, this weekend I was listening to perhaps one of the best gold timers I've known in North America, Mark Leibovitz, and he was on a North American radio show, and he writes and still writes a newsletter called The Volume Reversal Theory. And his work has always been volume leads market moves. And he had stated that his work was suggesting we were setting up for a washout type of trade and to look for volume, then to come in on the upside, and that will be the new leg up in the gold market. And I found that interesting because among gold timers and the digesters and people that follow him, he's always been among the top. So I just think, like I said, it's not pretty at the moment. It could even get a little uglier, but I think we're starting to see the ingredients for a really final bottom to this long sideways foundation move that's been done, and that's what's going to be needed to eventually get us eventually to get up to first the 1400 resistant area, and then the big resistance area now looks like it won't be able to get to until 2015, and that's going to be the 1550 area on gold. I think if and when we clear those two areas, then we'll make new all-time highs on the gold market.
Yeah, and when you look at the world economy, when you look at the geopolitical situation, all those things intuitively would be favorable for gold, right?
Yeah, intuitively, yes. But if you look at what I think if we would draw up a list, if we had a conference of all the leading world gold experts and even the bears sitting around, and we drew up a list of who would be those buyers taking advantage of that. There's a state of flux right now in the world. Look, even we saw earlier today a downgrading again on the expectations of not only the U.S. economy but the world economy. Very hard to look anywhere in the world and see growth now. Even China over this weekend, once again, looks like there's a possibility that their landing won't be so soft, that it could be somewhat hard. Very hard to find real growth in the world. Where we see the growth, and that is the $64,000 question, is in the monetary aggregates, that worldwide, basically, there's a continuing, rather net loose policy. And even in the United States, where everybody 6 to 12 months ago, including me, felt that the Fed was going to just ratchet up interest rates and and see bond prices fall and so forth. Even now, there's a new thought coming into the market that maybe the Fed, and of course they're trying to spin that to be bullish for stocks, but maybe the Fed is not going to tighten as much because the economy isn't as strong as everybody thought it would be by this time. So there's a resting point now, kind of like that rest area when you're taking a long trip on a highway, where I think gold buyers are going, okay, you know what? Let's just see how this plays out now. Let's see which way this turn's going to be. So I don't think there's a big investment demand for gold at the moment. That doesn't mean, and people still forget this, that almost 2/3 of gold demand still is from jewelry fabrication, and of course some people buy jewelry for investments. And we are entering the seasonal period where fabricators do more of their work and buy more of their gold than any other seasonal period of time. And I think that's going to insulate and help put in that triple bottom if we even go as far low as 1180, 1185.
Yeah, and what do you think of the Scottish independence movement there? If that goes for Scottish independence, is that going to trigger a move into gold, do you think?
I don't think that will have any lasting effect other than it'll probably give some strength to other people in other countries where there is talk of splitting away. And of course, that could be some geopolitical concerns. But I don't see anybody running out buying gold if Scotland votes to go out. And I don't see anybody selling their gold if Scotland decides to stay in the United Kingdom. I don't think that's much of a play. I do think that it's been my estimate, and it's not led by me. It's been led by a well-known financial reporter, one of the few independent minds in the country, John Credell at the New York Post, who's been writing a series and has been has brought in the Freedom of Information Act and has actually had New York Post lawyers sue the government based on an investigating report that he's been doing for over a year, showing that the Census Bureau was falsifying job reports, and he had noted that back in March that there was going to be a big blip up through April to July numbers because of the schemes that the Labor Department and the Census Bureau play, and then to look for the economy to get weaker again, and that that these were not real numbers that came out that supposedly was signaling that the economy was getting better, and this last number, as soon as it came out, it was disappointing. But every talking head on TV that was roaring about the economy getting better said, "Oh no, that's something wrong. The economy's much better. And it's probably going to take at least 2 months like that to get those people's mouths somewhat quieter." I think if we start to see that as we move towards the holiday season and the United States economy is rolling over again, then that argument that the Fed doesn't tighten as much weakens the dollar again. And then with Europe probably by then clearly having to kick into its own quantitative easing program, it's done everything but that, and that's really the only other option it has. We would then see another quasi, or at least not a tightening by the Fed, Europe easing, and Japan, still easing like there's no tomorrow, and even China. And I got a feeling at that point in time, we'll start to hear a lot of talk about it makes sense to be in gold, and we'll see gold buyers in it again. So I just think we could still have a little bit of a rough road for the next, 4 to 6 to maybe 8 weeks in the gold market. But I think we're setting up for that washout foundation that when we get into the first quarter of 2015, we're finally going to make a leg up. And this is not a cop-out, but the longer a move sideways after a serious decline and then a new leg up sets us up for even a bigger, higher move. So it may not seem beneficial now going through this aggravation, but we could benefit from it 6 to 12 months from now.
Yeah. Well, it makes sense. And, things, you can't put a timetable on them, can you? You just don't know when the move is going to occur. But hey, gold went up for 12 years in a row without a break, and the tree doesn't grow to the sky, does it?
And you know what? That's a very, very good point. And I have to say, I'm watching from all levels, professional investors, permables, people, public investors that could never think anything other than gold. They're all disenchanted. They're all basically saying, yeah, I don't think it can rise again. And like I said, I think this is a contrarian's delight. We have some technicals, not fundamentals, influencing the market. It could or may not cause one final washout, but it's really becoming all the ingredients, particularly from a contrarian standpoint, that one would want in order to set up for a new leg up.
Yeah, well, I guess we're going to know shortly, I think, and we do have a lot of black swans circling about, just waiting for something to happen, and any one of them could easily make the bullish case for gold and silver too, for that matter. And I don't think we're going to have that much longer to wait. And hey, the stock market's been hitting records, and the dollar's strong, and oil's been going down, and all this purportedly good news to make the bearish case for metals. But all the problems of the world are still there. Debt keeps going up, weak economies, secession moves all over the place, Spain, Italy, and in Scotland. And none of that is good for the existing economic order. So we might not have to wait as long as one thinks, and this could be the final move. Anyway, Peter, just tell us where we find your writing, how we connect with you.
Sure. Moneytalks.net, one word, moneytalks.net, and you'll see my column there, and it's free for anybody to subscribe to it.
All right. Hey, and you'll find the link to Peter's site on financialsurvivalnetwork.com. Don't forget, sign up for our newsletter. Got that free webinar coming up September 24th at 9 p.m. Just click the link on the upper left-hand corner of the site. Peter, welcome back. It's always a pleasure, and we will be talking with you again soon. Have a great remainder of the summer, what little is left. We know you're down there close to the Jersey Shore. And, hey, stay warm for the coming winter. It promises to be another bad one, according to those talking head weathermen.
Thank you very much, Kerry.
Thanks, Peter. Be well.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.